Welcome, everyone. My name is Axel Threlfall. I'm editor-at-large at Reuters, and it is my job to guide us through the next hour. Globalization, hyperconnectivity, and markets after the pandemic is the title of this discussion. A couple of things just before we start. If you've got questions, do send them through via the Q&A box, and we'll try and get to those towards the end of the webinar. You can access speaker biographies, webinar materials, technical support, also at the bottom of your screens there. Now, I know a lot of our viewers and listeners are in the market, so you'll no doubt be glued to the wires and the news screens anyway. But let me just give you the very latest off the Reuters wire. There is some calm in European equity markets, it seems, and support for US futures. That is on the back of a firmer oil price this morning, and that is on hopes of a truce in the Saudi-Russia oil price war. So we're keeping a close eye on that. Energy sector, unsurprisingly, is leading. We are also awaiting US weekly jobless claims numbers. That is expected to surge again. I think about 3.5 million is where a Reuters survey put it, and those numbers will be out just as we finish. Let me introduce our speakers. Ian Goldin is Professor of Globalization and Development at the University of Oxford. John Llewellyn is co-founder of economics advisory firm Llewellyn Consulting, and David Craig is the CEO at Refinitiv. Full bios are available on the platform. Suffice to say, all three of our speakers extremely well placed to try and help us understand where we are and navigate where we're going. So welcome to all of you. I've got a starter question for all of you. I want to put it to all of you. I heard the Secretary General of the UN say yesterday that this represents the biggest challenge for the world since World War II, that will bring a recession that has no parallel in the recent past. Now, as a way of setting the context, but without wanting to encourage hyperbole, how would each of you, in the most measured way you can, I guess, characterize where we are headed now, roughly in the length of a tweet? And Ian, let me throw that to you first.
Thank you very much, Axel. I think we are in a world war situation. We're in the first year of a world war, first few months. This is going to be very tough, very big, and of course different to the world wars global. The question is, are we in the first or second world war? Is this the war to end wars, and we have building after it, or are we going to move towards nationalism, protectionism, a Great Depression and the Second World War, the First World War? That's the question in my mind. But we're in a war at the beginning.
All right, Ian, thank you, and no doubt we'll expand on that. John, let's hear it from you.
Yes, it's a war, but it's a different war. It's probably not World War I. It's probably not World War II. And it's not a war in the sense that this time we will come out with most of our capital stock and most of our productive capacity intact. So we won't have to rebuild in that way. But in other dimensions, this is definitely a war, and it's got all the speed and the challenge and the complexity and the lack of knowledge.
All right, and David, with data in mind, what is the sense that you're getting now?
Well, with data and financial markets in mind, I think the current description is the financial markets are coping. The shocks have been extraordinary. But one of the reasons we're seeing an explosion in data at the moment is they're really trying to understand the true extent of this impact and shock, because it's just unknown at the moment. So what we're seeing now is a massive increase in data volumes and understanding of where the market is going and trying to model what the future could possibly look like.
All right. Well, thanks for that to start. Ian, I want to come back to you on the bigger globalization piece. History clearly shows us that protectionist pressures tend to rise when economic growth weakens. Already global trade was feeling a pressure before the virus reared its head. Has the globalization that we've become accustomed to now gone pretty much forever?
No, this is far from the end of globalization. In fact, some aspects are accelerating, like this digital call. The digital demand has doubled year on year, at least. So we're seeing some aspects increase. I think we will see a rebound in investment flows, in travel and tourism. The center of gravity very rapidly being accelerated by this, moving to Asia. And that Asia will recover first as well. So I think we will see a different globalization. And supply chain fragmentation had already reached its peak in 2019. There's going to be increased consolidation of manufacturing and services near the big markets, mainly driven by technology, that's automation, robotics, 3D printing, by customization, by quick delivery, and by the politics of protectionism. But that's not jobs coming home, that's systems coming home, driven by technology and the other forces. So globalization will continue. The big question is, will there be political globalization or deglobalization? And I believe this, if there's one thing this pandemic teaches us, is that we're going to have to cooperate more to stop the next pandemic and other global threats.
Ian, just to follow up on that, is anyone in charge of the world order right now? And if so, who?
No. The UN is missing in action. There's divided, not united nations. And this is really the question about which war we're in. Are we going to have, coming out of this, the creation of new institutions, as happened after the Second World War, the Bretton Woods institutions, the United Nations, the Marshall Plan? Or are we going to be more fragmented? But no one is in charge right now. What we need, and there's an absolute vacuum of leadership in contrast to the 2008 crisis, the G7 and G20 have been timid, and they've barely done anything. The US, of course, is missing, and that's absolutely a key part of the problem. Is Europe and China capable of picking this up together and running with it in other dimensions? I think they can start and should start, but clearly the US has to come to the table too.
All right, I want to come back to leadership in a second, but John, let me bring you in on the economic piece of this. The globalization that we know brought an end to, I think I'm right in saying, an end to an era of disinflation. We saw a bull market in bonds. Is that now over? Is that a sign that this is a very different type of globalization beginning?
I doubt it. I mean, what we had seen was China starting to come to an end of its globalization period in much the same way that Japan had. If you think back to the 70s and the 80s, Japan started growing very fast on the basis of low wages, cheap products, exporting into big markets, particularly the US, but also Europe. And it was able to follow that path for quite a long time until it really started to hurt producers in the big markets. And the real one was, of course, when it started to hurt automakers in the US. And the political response on Japan was, stop this is hurting too much. And Japan semi-voluntarily, semi-compulsorily started to establish plants in the US, and some of the biggest plants in the US now are Japanese. Well, now China was getting to that point as well. So there was a certain inevitability about this. So this pandemic may speed some things up. But I think if you put it in that longer term context, you see that there was a path that China was on, which was very like Japan before it.
In terms of the way governments and finance ministries are going about trying to save their economies right now, are they doing that, in your view, in the right way?
Yes, I think they are. Just picking up, marrying that with the point that Ian was making, these international organizations, of course, do their job with the blessing of political leaders. So the institutions that were set up after the Second World War were set up with the blessing of the American president, the small blessing of the British Prime Minister and government, and the acquiescence of all other countries who thought it would be better than what would happen otherwise. The 2008 crisis was a little bit like that. It's fair to say that Gordon Brown, intellectually with the UK Treasury, led the analysis of that, and Obama stepped back and let him do it, which was a rather big act on his part, and rather sensible probably. So this time, unfortunately, we're not seeing any national leader championing any sort of international approach or any sort of international organization. So as in all of these things, all politics ultimately are local, and in this case, all politics are national. Now, notwithstanding that, in my judgment, yes, countries are by and large doing the right thing. They're supporting income, and that's the thing which was hit. So well done.
All right. And as I said, I'll come back to the leadership question, because I know your experience of the OECD can inform that discussion as well. David,
Axel, if I may, I would suggest that domestically countries are doing the right thing, in some cases very belatedly and half-heartedly so, but internationally they're doing absolutely the wrong thing. There has been no major response internationally as there was in 2008, or of that sort of scale and amplification. And when this starts leading to the skittling of economies around the world, which I think it will, as it starts hitting highly indebted emerging markets, there's going to be a massive need for injections of capital, debt write-offs, and lots of other things. And I don't see that conversation happening at the scale and speed that it needs to happen.
Okay. All right. As I said, I do want to come back to that leadership piece. But David, very quickly, on the call yesterday, you threw the prep call, you threw John the question, have we seen the financial crisis yet? What is the sense you're getting, David, from your clients about the ways in which they'll need to adapt, not temporarily, but permanently? And what is the sense you're getting as to what their main concerns are now?
Well, I think our clients currently are in coping mode. Clearly, transaction volumes are through the roof, reflecting the trading that's out there and the change that's happening in the markets, and they're dealing with that right now. What is really interesting to us is how, I would call 5 years of digital change has just happened in about 5 weeks. Our clients who are working from home, they've gone to digital collaboration tools. They've accelerated massively how they operate in virtual ways, just like we are here. And a lot of the people that said, well, this wasn't possible, or it'll be too slow, or other constraints that were there, have stopped reflecting those constraints, and they've moved incredibly quickly to this new world. And I do think it opens up all sorts of questions about how we all work together in the future and how we collaborate in this digital world. So I think for our clients, there's a lot of things that have changed very quickly, and a lot of them, they're asking themselves, will we ever go back to how it was? Do we need the same kind of physical infrastructure around this? But also, do we need to rethink our BCP strategy, having these big, large sites in one location? Well, that hasn't actually helped, because that one location can have an infection, and then you have to shut it down. So there's all sorts of questions about what the new digital world and this new exposed world will create for our customers that they're trying to wrap their heads around, whilst dealing with insane transaction volumes and data volumes in the market. Not just on we've never seen a spike that is not a spike, it's a continuous day after day after day of transaction volumes and data volumes being this high. That's extreme. Yeah.
I'm seeing some questions come through, and clearly our viewers are keen to know what we can learn from history. So John and Ian, a quick question to both of you. And there is probably a very, very long response to both of these questions. Try and keep it as brief as you can. John, how does this look compared to the 70s oil shocks?
There are similarities and there are differences, which is what you would expect, I guess. The thing about the 70s oil shocks was that firstly, that both of them were large. They were shocks to the world economy of about 2% of GDP. But more importantly, they were novel. The world had never seen a shock which was that big, that was simultaneously raised prices, was inflationary, and reduced demand, which was deflationary. And certainly those of us who had to think it through at the time were forced to have a completely new framework of thought. And I think that that's largely where we're at. It's totally different, but it's forcing a new framework of thought, because we've had to close down economies in order to protect health systems.
And for you, Ian, your study of the Renaissance and the books that you have written, how does that study relate to this pandemic?
Well, the Renaissance was the first information revolution. It was also the first age of globalization. We celebrated 500 years later because of the genius it unlocked and what it did for the world. At the same time, the ships that went to the New World killed most Native Americans through the diseases they spread, and Europe ended up in religious war for hundreds of years following that. So that I believe, is a very, very salutary lesson. The failure to manage the pace of change, the failure to manage connectivity, what I call the butterfly defect of globalization, was first manifest then, and we're certainly seeing the butterfly defect of globalization again today.
Why was the international community so dismally unprepared, do you think, Ian?
This time around? In the 2008 crisis, George W. Bush, who was the president at the time, picked up the phone to China. There was relatively harmonious relationships going on. The G7 was operating. The G20 already at finance ministers was elevated to heads of state level. And it was on top of a relatively good relationship between the US and Europe and a reaching out to China. Now we're on the back of years of friction, which have been amplified through this. You know, President Trump calling this the Chinese virus, tensions all around, including with Europe. And so this is really coming on top of a period of rising populism. This populism, of course, is a result of the financial crisis. I would argue that we wouldn't have the politics in Europe or the politics in the US if it hadn't been for the financial crisis. That reflects a catastrophic failure of experts, of central bankers, of the international institutions to manage connectivity. And people are angry about that. And that's why I think this is such a test, because what that demonstrates, the 2008 crisis, is actually that people's reaction was to try and build higher walls. We know those higher walls won't keep out a pandemic or climate change or any great threat. And that's why the onus, I think, is on our leaders to show that they can do this in a different way by reaching out.
Yeah, and I think, you know, we're all well aware of just how important that, and again, history shows us the importance of collaboration and cooperation. I think we're all aware of how important the US voice is in this. And I know, John, when you're at the OECD, that was very clear when it came to decision making. Can the US be got back to the table? Can the US be dragged back to the table, or can we do without the US here, given there are so many other players now involved in the decision-making process?
It's much more difficult with the US, as you rightly allude to. OECD experience, and remember that's a consensual organization. All the countries in there reach their agreements by consensus. In that body, if the US wants something to happen and it's a well-constructed case, which it always used to be, other countries would go along with it. If the US wasn't interested, even if it was a well-constructed case, it was very difficult for the vast majority of other countries to bring it about. So the US is very much a first among equals in that sense. We've asked the question, for example, of the Germans, could you, Europeans, with the Chinese, put together a revised, altered, more modern, more appropriate World Trade Organization, for example, and say to the Americans, we want to work within a rules-based framework. We're not excluding you, but we're going to put one together which we'll trade with, and if you wish to join with it, well and good. But there seemed to be a very deep hesitation on the part of the Germans to say, yes, Europe isn't yet an outward-looking, well-organized foreign policy player in the world. And I think, unfortunately, that's true. Foreign policy is still largely the province of national governments. That raises the interesting question, which Ian will likely have a view on, is whether how China will play this. Will it seek to come out and bring the United States in, or will it seek to come in and bring the Europeans? China's quite important in that sense.
And I want to get, Ian, I want to get your view on this, and David, I want to get your view on this as well, because I know this is something else that you're looking at. Ian, were you heartened when the Chinese president reached out to President Trump? Was that more than just a token gesture? Do you think there is something to be had from this?
Yes, I think the Chinese certainly realize that the interdependence is absolutely intrinsic to their own well-being. Not only do they hold $2 trillion of U.S. reserves and rely on exports and markets with China, but they recognize that all the global threats which are going to threaten their citizens as they are ours, be they pandemics or climate change or others, are going to require cooperative resolution. So I think it's genuine. I think the power relationship is clearly changing, and now the onus is really on the US. Do they step up to this and see a world in which they can share some power sharing? Are they ready for that transition yet? Or is this going to take even longer? But I certainly think that Europe and China could be part of leading on this. And of course, many of the other global threats can be done by a smaller set of players. Pandemic is unique because it's the only threat we all face which can come from any place in the world. And that is very different to any other global threat.
I recall when President Trump took office, a number of stories, Reuters stories included, about the way the Chinese were trying now to court the Europeans in a subtle way at first. I wonder if that is now becoming a little bit more obvious. David, what insights do you have into that China-EU relationship?
Well, I think we're just reflecting on what Ian said. I mean, the biggest crises the world faces at the moment are global crises, and whilst nationalism is rising, the crisis of climate change and pandemics ignores borders. It doesn't care about borders, and that's what we've seen. I was listening to the UN this morning talking about the smaller nations and the poorer nations, and the challenge, of course, is we're now like an electronic network, and we're only as strong as the weakest area. Because if that weakest area has a pandemic, it will then spread, and nothing that governments have been able to do has stopped this spreading. So my hope is that actually in this interconnected world, we do realize that these challenges have to be solved by governments across government, and we can't rely on national politics because we're not protecting our citizens in that way. When a cure arrives and when a treatment arrives, wherever it comes from, there's going to have to be a global coordinated response to the rollout, deployment, and economics of that treatment. So maybe we're seeing some bright shoots of collaboration. I hope that we see a lot more, because I think the world realizes that it's the only way that you get through this. You can't rely on national politics at the moment to resolve this in any country.
Yeah.
Axel, just one thing that ought to be said here, which I'd cooperate because it's encouraging, and that is that on the economic side, on the financial side, when you get a calamity of this sort, there's a worldwide clamor to hold dollars. Everybody wants to hold dollars because ultimately that's a claim on the world's biggest and most versatile economy. The response of the central bankers in general and the Fed in particular is vital here. And there, the United States has shown real leadership, and the Fed has engaged in massive swap arrangements, just as it did in 2008, and has disseminated them through very many of the central banks. So that's one part of the world in which international cooperation and leadership have both proceeded so well that we're unaware of it. But we'd have been very well aware of it had they not.
Do you also take heart from that, from what John said, Ian?
Yes, very much. I think it is an exception. But clearly what the Fed has done has been extremely important. I would, just to build on what David was saying as well, it is the case that we need much more cooperation. But I would stress that for most of the threats, like antibiotic resistance, stopping the next financial crisis, cyber, a small constellation of countries and companies particularly, and cities and states can solve most of the problem. It's really only pandemics that require all countries in the world, and even climate change. 24 countries would account for 90% of emissions. 500 companies do. So who you have as the problem solvers depends very much on what the problem is. And I don't think our reflex should be that everything goes to the UN or global governance. Our reflex should be, who do we need in the room to fix this problem? And it just so happens with pandemics that we need the powerful players, and they need to be able to access every city in the world, particularly the cities that are near any airport hub, which means, thousands of cities around the world.
Sure. Look, I want to get back on some of the data stuff, David. Some questions are coming through, particularly on specifically with regard to this. It's no great surprise that the volumes of data being consumed are going up. I mean, I think that is no great surprise. What perhaps more telling, though, I think is the type of data that your clients and that investors and the big financial services players are gobbling up. Can you give us a sense of what that data is? Some of these slightly alternative data sets,
yeah, I mean,
and what that might tell us about what people are thinking.
Yeah. I mean, the data volumes, both in production and consumption, are going up because as the markets move more volatile, they create more data. But also we're seeing the consumption of data, particularly some really interesting data sets, increase. We call it the data on the data. I mean, mortgage-backed debt securities, mortgage-backed debt underlying information has gone up 8 times. And clearly that's the market looking at these instruments, which were an issue in the last financial crash, to see whether there's weakness in that area, either in commercial or residential mortgage markets, and where issues could be there. Cash and liquidity is king. Everyone's poring over fundamental data of companies to just try and understand their cash liquidity positions, where there could be other weaknesses, and what's happening. Rather surprisingly, or maybe not, an increase in sustainability data. We've seen people consuming more of that as they want to rebalance. They also want to understand some of the ESG type characteristics of portfolios. And I don't think that's a trend that's going away. But on top of all that, as I'd call sort of the standard data sets, the alternative data sets are really interesting. Satellite data on CO2 emissions, which used to be used for sustainability, is now an economic indicator of whether a city is coming back to life and going. Traffic data, hotel bookings, flight bookings, 8 times increase in the consumption of sentiment data on our platform as people try and gain an idea of where a location or a city or a company is based on the sentiment of what's out on social media. So we are, as people try and peer forward and try and model these curves and try and build a better picture, they're both looking to say, can I build a better curve with intelligence and recovery? Or also, can I protect myself because I see, for example, issues in mortgage-backed securities or liquidity position of certain industries. So you're seeing a variety of both happening at a demand that we've never seen before, just off the charts.
Does that, John? Does that what David's just said and what the big clients are looking at? Does that surprise you? Does it smack of investors trying to gain an edge that others haven't got, or does it smack of desperately scrabbling for some kind of answer here?
I think it's both. I mean, traders have always wanted to gain an edge. They were willing to pay a small fortune to save 3 milliseconds in getting data from the Chicago exchange to the New York exchange. But this is different or additional, because we're all struggling, exactly as David says, we're struggling to understand what's going on. And so we're tracing through a new pandemic in order to try to predict what the right policy is to slow it and so on. So both uses of data are new in form, old in motivation.
What are you telling, very quickly, John, what are you telling your big clients is going to happen in the markets over the next couple of months?
Well, we're saying to them, as I said to you at the outset, that this is not a war in the sense that the economies haven't been physically destroyed. So we expect to see the economies bounce back in due course, probably not reaching their previous trend line because some damage will have been done. But we must remember that trend line was not altogether satisfactory. It was a slow growth, very low inflation trend line, which most countries and many societies were dissatisfied with. So a V, if we're lucky, but we would be very lucky to get straight back onto the trend line, and that trend line wasn't good enough. So there's a lot of work to be done.
I think maybe this shouldn't surprise me, but a stat I saw this morning, and Ian, let me come to you on this. 1/4 of humanity is currently in lockdown. Of course, we talk about recession, some might talk about depression, and the question is how long that is likely to last. Of course, that depends on how long the lockdowns last around the world. This is a debate many have been having, and it's a delicate debate, but are saving lives and saving economies in conflict now, Ian, and what does that do to the the grand globalization debate?
I think in the short term, there's clearly a massive trade-off between saving lives and saving economies. In the medium term, not so. But what we're also seeing is a tremendous sacrifice by the young for the old. Solidarity is trumping economics here. Young people are basically staying at home, not getting jobs, inheriting a massive debt, will be poorer for generations to come, because they want to keep their parents and grandparents alive in many respects. And a lot of these isolation measures are because of this very differential incidence of COVID-19 by different age groups, and the elderly and vulnerable particularly protecting them. So I think we will see that. It's very heartening to see how the young are prepared to make the sacrifices that they are. How long they're prepared to is a big question, and what the implications when it comes to the next cycle of votes are going to be is an open question. You know, George W. Bush was very popular in 2008 and lost the election in 2009. So we're seeing this massive lift in popularity of current leaders, apart from Modi in India. But whether this will be sustained and how it translates, if we can't get people back into jobs, and if the scale of the debt is so great that people feel permanently disadvantaged, I think is the big question.
And again, looking back and being informed by what has happened, does that unspoken social contract that we're talking about between the young and the old, does that surprise you, and how detrimental could it be?
Well, we've had that contract in the wars as well. It was the young men mainly then that went out to fight to protect the nation, and now they're staying at home to protect the nation. So I think it is a solid one, but it does really depend on the ability of these economies to rebound. And I think it's going to be a very different economy, not only because we won't get to the trend line, and Johnny's absolutely right that this isn't like a war in the sense that the capital stock is there, but if a lot of companies are bankrupt, and if the levels of debt of our economies are so great that taxes go up sharply, which I think they will, there'll be recalibration of the role of the state. I think people are going to want to see much more investment in health and education going forward. We're back, I think, to the post-Second World War situation where we see a clamor for the state, and where, when the chips are down, everyone recognizes that it's governments, not the private sector, that are going to save them in this. Private sector is doing an incredible job, and the collaboration that's happening. But for a new vaccine, for the money that's going into it, and for looking after us, if we're afflicted by COVID-19, we rely on the state. And so I think we're going to see a very different sort of economic and politics coming out of this than we did going into it.
Could business, Ian, and let me start with you, Ian, and then David, I'd be interested to hear your views. Could business lead the pack, lead the agenda if political leaders either can't lead or refuse to lead?
Well, interestingly enough, business has already been leading in many respects. If you look at how businesses have told their staff, for example, to stay at home well before governments did, and not least in the US and in many states in the US, how businesses have taken the lead in looking after the welfare of their people, how businesses have committed to keep paying their wages before government guaranteed it in many cases, and how businesses have collaborated, which raises very big questions for competition policy going forward. How businesses have collaborated to, build ventilators or produce masks, and how retooled themselves in what really is a wartime effort. I think business is, but stopping a pandemic is going to require, in the end, governments to create a global NATO type of activity to re-empower the WHO to actually be fit for 21st century purpose. In the end, there's a lot of things, particularly on pandemics, less so the other global threats, that really governments do need to take the lead on.
David, I'm interested also in the staying with business and leadership in business, and the sort of shakeout we will see in business and its leadership. It reminds me of a session I hosted earlier this year in Davos, just as we were beginning to hear about this virus, and it was entitled "Leadership: Effective Leadership in the Digital Context." Now, that has clearly come to the fore very, very quickly, and is extremely important. How much pressure are some leaders out there feeling now in this context? They're pushed into it, and they need to do it now.
Well, I've been joining various forums of other CEOs talking and sharing practices of what we're doing, how we're coping, how we see things. And they've been really interesting to see how the peer group is responding. And you know, one way I'd summarize it, if you were ever in those meetings that debated the role of business and society, suddenly those meetings have got a lot more serious, because the role of companies and society is severely under test right now. And particularly big business has an enormous responsibility, particularly global big business, to help employees and to help companies and to help governments through this. And as Ian said, the collaboration around health solutions from sectors that don't traditionally enter the health sector is tremendous. It's happening in the digital world, it's happening in the physical world. You hear Formula One companies doing it, etc. So I think the role of big business is extremely important. We ourselves took the decision to move to a virtual operating environment, work from home, at least a week before the UK, at least 3 weeks before parts of the US, across 100 countries, 18,000 employees. And the reason we did that was really, one, to protect our staff and support them, but two, to actually recognize that we had a role in society to flatten that curve. And we actually thought that some governments were being too slow and that we should make that call. And I think a lot of the CEOs that I talk to have done similar things around this. I do want to build on this, and there's something that John said, and maybe I disagree with him a little bit on capacity being destroyed. My worry at the moment is that for the small entrepreneurial sector, you know, when I go for my one allowed jog down the high street, the shops aren't just closed, they're shut. And are they going to come back? I think a lot of the entrepreneurs, the media, the consumer, the retail sector, there has been capacity taken out already. And that's an extraordinarily important part of the UK, US, Western economies, as well as Asia. And how does that get back, I think, is extremely important. And do we end up of a world with large global corporates supported by large governments, and the entrepreneurial side of employment and innovation has stepped back for 2 or 3 years? And that, I think that's a real concern about how, you know, whenever you go through a crisis, the impact is always unfair. And I worry that actually this is less severe for larger corporations in certain sectors, but very, very severe for the smaller entrepreneurial individuals and companies and businesses, particularly in creative, leisure and services and those parts of the economy.
Yeah. Okay, and you know, thank you, because that speaks to a question we've just had through as to the pandemic's impact on entrepreneurialism and small business. Ian and John, I'd be interested to get your views on this as well, because yeah, it's scary to think that spirit of entrepreneurialism that we have spoken so much about of late might be dampened now and might be put on the back burner, if you like, now.
Should I come in on this first?
Sure.
Go ahead, John. Go ahead, John.
Well, I was just going to pick up what I think risks being a confusion, and it's certainly one that's been worrying us quite a long time. This is not a war in the sense that the capital stock has been physically destroyed, because it hasn't. That corner shop is boarded up, but it is still physically there. On the other hand, as David says, it's not functioning anymore. And I think what we're therefore talking about is a process of structural adjustment. Now, the structural adjustment goes on all the time. People are always moving from activities. Activities which are low productivity are always getting smaller, and activities with high productivity are getting bigger. The structure of the economy changes to becoming more of a service economy and less of a manufacturing economy, and so on and so forth. So structural change is a continual process. But what David's pointing out to is right, and that is that this is another accelerant of structural change, because although the shop is there, the small chap who ran it is now out of business. So what this is going to do is it's going to put a premium, such as possibly we've never seen, on the ability of economies to adjust. They were put under that challenge by technology. They've been put under that challenge by globalization, and now they're going to be put under it by the consequences of the pandemic. So the ability of economies to have people move from sectors, capital to be allocated differently to sectors, is going to be the biggest challenge. And I think what we'll find is that the Nordic countries are best. They're brilliant at it. Britain will be in the middle. The United States will be quite good at it, but will do it in its customary brutal way.
Okay. Ian, yeah, come on in, Ian.
Yeah, no, I think this is a really crucial question, and it's very related to something I've been doing a lot of work on, which is trying to unravel the productivity paradox. Why haven't we seen across OECD, but also many developing countries, any increased efficiency and productivity coming out of the technological revolutions, not least the digital revolution? And there's a set of 24 different explanations that we've reviewed in huge detail with my postdoc team in Oxford. And one of the most powerful explanations is actually what we're seeing is a concentration of economic activity amongst the superstars, and that they are, in a sense, vacuum cleaning the innovation that's been happening in many areas. And if this pandemic, as David has suggested, reinforces that tendency, that is very worrying, because it implies that we're going to have even lower levels of productivity going forward across the economy. And just to build on as well on what John has been saying, the question is, can economies just? The main explanation we have for the productivity paradox, which is stagnating and declining productivity is happening while we have technological rapid change, is that economies are not adjusting effectively as quickly as they should, which is why productivity levels are so much higher in China, triple what they are in the UK, for example. Now, if that is the explanation, then this question of the adjustment of societies, and it's not just the hardware. Are you putting in your digital networks? Are you putting in your rail systems? Are you putting in your hardware, the software, the regulatory environment, the competition policy, the education system, the skills, the training? All of this needs adjustment. And I think that's absolutely right to focus on that as key to the recovery from this pandemic.
And how long does something like this take? And I ask that because as you tweak your globalization model, as we try and work out a model that will survive and succeed in the future, you talk, to the productivity point, is China best positioned in this new order of globalization? And how quickly can Western economies change their own models to catch up?
Well, I think there is a worrying side to this. I mean, we've seen it in the decision to not expand Heathrow and the what's happening on high-speed rail in the UK, the rapid depreciation of infrastructure in the US, the inability to invest in big capital and make big decisions around big capital works, but also even the transformation of education and other systems. And it's no accident that Singapore, China, South Korea are much better at doing that and have much higher levels of productivity growth. So we are going to have to find a way, and there are ways to do it, including through utilities, including, of course, through incentivizing the private sector to invest. We're going to have to find a way of doing that in North America and Europe, which we haven't found yet.
I can't resist jumping in here with just one thing, Axel. There's a statement that was attributed once to Lord Palmerston. It's never been tracked down as being true, but it captures the point that people find change difficult. They feel uncomfortable with rapid change. It's possibly no accident that Singapore teaches change in its schools as part of its curriculum. And the quote from Lord Palmerston is change, 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 as if things aren't bad enough already. And I think that captures the attitude.
Yeah. Look, I'm wary of the time. We've only got about 15 minutes, and I'm weaving in as many of the questions as I can. But let's move to the way this might improve our responses to other challenges, such as climate change, such as sustainability. And David's mentioned ESG already. A question comes through: where is the sustainable finance focus going to go after this? Will it get lost in markets and investors looking for short-term gains to stave off the losses that they've experienced, or will we see the opposite, shifts to longer-term investing, clean energy funding, i.e., are we going to use this as an opportunity to learn from this and use this as an opportunity to rebuild the model? David, let's start with you.
No, I think it's a really interesting and important question, and actually something that I've had a lot of discussions in the last week with other CEOs about. And there is anecdotal evidence, and more evidence will come out, that actually the companies that have a higher sustainable score, if you like, better run, better governed, better footprint in the community, are actually going to fare better through this because of just the nature of how they operate and how they run. Clearly, the sustainable supply chain, if I call it that, is going to come under close inspection and redefined in this new world. So is it right that I've got supply chains with 20 different steps in 20 different countries? And I'm not quite sure of how much risk each of those countries have and how that's operating. So what is a sustainable supply chain is not just about its carbon and emissions footprint, but also how does it work in which communities and where does it source its human capital and resources? How does it look after that? And how does it work effectively through that? And I think those are going to become under enormous scrutiny as we move forward. I think there's another opportunity that as governments pour in money to invest to get us through this crisis, there is an opportunity to make sure that investment goes into the more sustainable industries, projects, and areas that we all know that we needed, but we didn't necessarily know where the money would come from. And I think the industries and the financial sector can play a really important role in helping identify those projects and the measures that are required, so the money that does pour back in is built and created in a more effective way. It is remarkable that in January we all swarmed around sustainability as the big issue, the big priority. We sort of saw this virus coming, but no one took it seriously quickly enough in Western Europe. Now we're dealing with a crisis, but we shouldn't forget that sustainability is still a huge challenge for the world. And if anything, the role that we are playing with biodiversity, with economies, and with nature, somewhat caused this crisis. We are flying around the world too much. We are interconnected in a physical way too much. And I think that's going to come back, and people are going to relook at this whole agenda.
Thank you, David. And by all accounts, it'll continue to get worse. I mean, I say that because my question to you, Ian, and John as well, can we sustain the break, if you like, that we're giving our planet? I heard someone say, or someone was quoted as saying, the planet needs more than a year off here. When you look at what's happening in Canada now and elsewhere, bailouts for the oil and gas industries, bailouts for the airline industries, how hopeful are we?
Well, firstly, I think
I wouldn't be too pessimistic about this, frankly. First of all, bailouts, of course, they're a charge on the federal budget, the state budget, the national budget, but you can always sell them back to the private sector afterwards. So they're not wholly demanding. And just to put some numbers on this, the OECD reckons that advanced countries have to spend 3 or 3.5% of GDP split between the private sector and the public sector in some way to maintain the infrastructure. And I think climate change economists would say 1 to 2% of GDP spent on the appropriate climate change policies would take you a long way to making the situation much better than it is at the moment. If you put those two numbers together with David's point, the trick, of course, will be to engage in expenditures which overlap, which serve both purposes, so that you don't have to spend 3.5 plus 2, 5.5% of GDP on both, but less than that, because some of your investment, for example, could be in infrastructure which is green and friendly. So those are numbers which are large, but they're not unimaginable.
Yeah, Ian, come on in.
Yeah, I absolutely. I worry with the argument that this is giving the planet a break, and I've even heard some of my colleagues in Oxford saying that actually, it could be a good thing. This is how we should deal with climate change: is stop flying and stop our economies. I think that's a very dangerous way of thinking, because in order to deal with climate change, we're going to firstly need to have much higher levels of income around the world, continued income growth, not least in the poor countries that have to get off coal. We need massive new investments in renewables. And of course, we don't want to leave 2 billion people around the world in poverty because we stopped globalization. So my sense is we need to be able to marry a new economic growth model with a clean growth model. And as John has highlighted, this might provide an opportunity, and David has also indicated, through massive new investments. The question is, can the new Marshall Plan, can the new Bretton Woods institutions, whatever they are, that emerge out of this, be hardwired in a different way?
And where does, and this is to a question that comes in from a viewer, where does that East-West relationship sit now? What in your view is happens to the relationship between China and the rest of the world on the back of this?
My sense is that this is going to accelerate the shift to Asia economically. They'll recover quicker. They'll continue to have much higher levels of growth. I think they'll have 3 times the levels of growth of Europe over the coming decade. That's going to compound. Obviously, 3 billion people growing at that rate leads to very rapid.
What about the cordiality of the relationship?
Well, politics tends to lag behind economics in rather a dramatic way. I think China is going to constantly, and it's not just to Europe, I mean, the Belt and Road Initiative, to many, many other countries. China will reach out everywhere it can to build relationships, but on its terms, which is the non-interference terms. The question for us and for North Americans is, are we prepared to accept that term? Because we believe in human rights and in other freedoms. So I think it will build, and I think what this pandemic will do, and this answers a previous question you posed regarding other threats. If we can deal with this pandemic and stop the next pandemic, we would have learned to deal with all other global threats too, by learning to cooperate.
That sounds optimistic, I've got to say. Sorry. Let me look. We've got about five minutes or so before we finish. A couple more questions, and I'll come to one of them right at the end. But the end game here, the exit, the strategy. It's something I've spoken to epidemiologists about on the one hand, and businesses and policy on the other hand. Does anyone, John, let me start with you, but does any one nation have a workable, realistic exit strategy?
For the pandemic or more generally?
Well, as they come out the other end of this pandemic, yeah.
Right. Well, I would again, at the risk of beating a drum, say that exit strategy is much the same idea as an adjustment strategy. You have to adjust to new circumstances, and that never stops. It's gone on since time immemorial, driven by technology, driven by demography, driven by the rise of nations and so on. And so more than any other single thing, I believe, countries are going to have to study how to effect change. And that means all the things that I mentioned, and also have the public go along with it. And if you were to ask me which countries do it best, I'd say you've got to look at the Norwegian, Swedish, Finnish, to some extent Danish experience. They do it best. People say, well, they're small countries and it's easier for them. Maybe, but we could divide our big countries up into small units if we chose. But that is our challenge, how to handle change.
Actually, if your question is... If your question's about how do we exit from the lockdowns and get our economies going again, my view is that we're going to have a lot of learning from Asia. They are a month ahead of us, so we're going to be able to look to them. They're doing it very effectively. It's going to require universal testing, universal antigen testing, so we know we've got it. I think we're going to be entering a 2-tier society environment in which a very significant part of our societies have had it or exposed to it, can go back to work, can travel again, can do everything, socialize, but there will still be communities in our societies that haven't had it who are very, very vulnerable. And so, like we used to have vaccination cards essential for travel, that will become the norm. In the medium term, and I'm talking now a year and a half or something out, hopefully there'll be a vaccination. Once we've all vaccinated, this pandemic will be addressed. Then we really need to think about how we stop the next one. But my sense is that that's how it's going to happen. We're going to have stop, go. And as societies have had it or have antigen, they will reintegrate and take things forward.
Okay, and David, to you on this, businesses tend to like a little bit of certainty. Businesses and markets tend to like a little bit of clarity. What is going to allow the markets and business, again, from what you're hearing anecdotally, to find the conviction they need, really, to move on from this?
Well, I mean, I'll reflect on the conversation I was having with our team on this very topic and with many customers we've been having. We all need to understand the curve, i.e. when do we hit the peak in Europe, Italy, Spain, France, UK, then US, and how far away from we are that peak? And how are the measures that are being taken by governments, how are they taking place and how are they stopping the spread of the virus? We don't really understand that yet. We've got evidence from China, and Hong Kong, how they've responded. So we're looking very closely as Ian said. I mean, it's amazing that I think Hong Kong's had 4 deaths in total through this crisis because of the way that they have handled it. But we, first of all, need to understand when we come through the peak, because it's only when you get through the peak that you can see light that some of the measures that we've had to take to the economy can be brought back, we can start to gradually release activity, release workers, have some shops working. What are those exit strategy measures that you talked about? Those can only start when you see us get through the peak. And so far, we don't really know when that peak is going to be. People are trying to model that and do it. And then we need then we need certainty on the health solution. That there isn't yet a solution to the healthcare crisis, which is the crisis that we're really dealing with. So once we get past that peak and we start releasing those measures, again, does that work? Or are we on, off again? And no one is yet certain because there isn't a health solution to this. There's no vaccine yet, or there's no treatment yet for it. So I think, unfortunately, at the moment, we can only look at the certainty we can get to, which is currently the data around the curves, total infections, total mortality, how is that operating and working out, before we can see a light to the other end of the tunnel, at least when the measures then start to come off. All
right. Look, one final question to each of you, and it comes from one of the viewers, and it's really, I guess, to put you on the spot a bit in terms of a call or an outcome or here. And the question is this: can each of you make one suggestion on what governments and businesses should and can do globally to fix this issue quickly and efficiently? Ian, why don't we start with you? And this probably speaks to the new form of globalization and this new Marshall Plan.
Yeah, I think we need a Manhattan Project type of activity at the global level. There should be a massive, concerted, coordinated effort to find a vaccine. There should be a massive, concerted, coordinated effort, not national only, to get the necessary ventilators, masks, and other equipment. It's an absolute tragedy that we don't have it. To have the necessary test equipment. We like a third world country in some of our countries in terms of the amount of rollout we're able to do. And that's before it gets to the countries that really have no resources. I gather there's 3 ventilators in the whole of Liberia, for example. This has to be a global effort, and we're not seeing it. It's not a question of money only, and that's important, but this is a question of putting the top scientists, putting the engineers together from the world and doing it. It's not a moonshot, because that's national, it's much bigger. And businesses and governments have a key role in doing that.
John, in terms of the response, we've talked about the central bank and the finance ministry's responses, fiscal need here. What do you suggest?
I think fiscal responsibility still belongs to countries individually, but I think they can do a lot to support one another simply by saying we're all doing the same thing, and therefore support one another, as it were, morally and politically in the way that was done in 2008. I'm less worried about that, more worried about modernizing the WTO, modernizing the OECD to some extent, modernizing the IMF to some extent, to make them fit for purpose in the changed world. And that will require the Americans to want to take part.
Okay, and David, let's have a final word.
Yeah, well, I'll give two thoughts. One is you've got to keep running. So job number one is, through the weeks that we may be in this situation, absolutely keep the businesses running as job number one, and we shouldn't lose sight of how hard that is going to be. To Ian's point, though, on dealing with the health solution, whilst we pour money into dealing with the economic and the market crisis, we need to tenfold increase the money into the medical solution. And we need industry to collaborate with government and with each other in a different way than it has before. There needs to be almost an amnesty on the ways that we've worked together to free up ways of collaborating, as we are seeing, so government and industry can work together.
All right. Very good. Look, we are out of time. Many thanks to all of our viewers for your questions. I really would love for us all to regroup and at some point and revisit some of the ideas that we've thrown around today. You know, who knows, a month, 2 months, 3 months, 6 months down the road. But it remains for me to thank our speakers today: Ian Golden from the University of Oxford. Many thanks to you. John Llewellyn from Llewellyn Consulting, and David Craig from Refinitiv. Many thanks to all of you. It's been a fascinating discussion.
Thanks to all of you, and good luck and good health.
Indeed,
thank you.
everybody.
Stay safe.